South Korea's consumer price inflation dropped back into the 2% range last month, but core inflation, which measures how fast prices rise by leaving out food and energy items, rose at its fastest pace in 2 years and 7 months. For more on what this tells us about the domestic economy, we're joined today by Professor Shin Se-don, professor at the Division of Business and Economics at Sookmyung Women's University. Professor Shin, thanks for coming on today.
Good morning.
So consumer price inflation fell, but core inflation hit a 31-month high. Why is this?
Well, for the entire year 2025, the core inflation, which is the target of inflation policy by the Bank of Korea, remained below 2.0%. But from early this year, January, I think, 2026, it went up from 2.01% to 2.6%. So for the last 6 months, core inflation, core CPI inflation has risen almost 1/10%, and that is a significant increase. And if you look at the cause of the increase in the core CPI inflation, I should point out that is because of exchange rate. The import price inflation has been 20% for the first half of 2026. So I think the prime reason for the rise in core inflation, I think, is because of import inflation. And the reason for the import inflation, I think, is because of the exchange rate, which remained, 1,400 for the most part of 2025. It went up to, 15, sometimes 60 during 2026. So I should say that, exchange rate has been the prime reason for the increase in the core CPI.
I see. And what does this economic trend suggest about the country's economy at this stage, and how might it affect the Bank of Korea's decision on interest rates in August?
Well, we know that, for the last couple of weeks, the exchange rate came down from 1560 to 1420. So that was a dramatic fall in the exchange rate. So sooner or later, I think the core CPI inflation will come down from 2.6% last month, I think, to probably 2.2 or 2.1%. So from now on, for the second part of 2026, core CPI inflation caused by higher exchange rate would die down. So the key question is whether, the energy prices due to the Middle East conflict will go up in the second half. I think that is the critical, factor. And the Bank of Korea will look at it. And from the month of, I think, August, they will not raise the interest rate, because they have to look at what's going to develop in energy prices, because exchange rate has come down significantly. So I think the month of August, the Bank of Korea will oppose in exchange movement.
Right, and I also want to ask you about the tax reform plan that was unveiled earlier this week, and that was centered on expanding tax benefits for owner-occupied homes and imposing a heavier burden on higher value properties. What impact will this have on the housing market, and how effective do you expect this measure to be in lowering house prices?
Well, if the target of the tax policy is to lower the rise in the property prices, the key factor is whether the house owners will let their house on the market. In other words, increase in the supply. That is the key question. And with this kind of a tax reform, I think the house owners will not let their houses on the market. In other words, there is not significant change in the supply, and only the tax burden will be increased significantly, across the, housing prices. So tax burden will definitely go up in 2027 and more in 2028. But the very negligible effect upon, coming down price of houses, because the increase in tax burden is not going to be prohibitive in the sense that they will they will let their houses on the market. So price effective will be very, very little, and the tax burden will be significantly raised.
And that reform plan also included revisions that would exempt value-added tax on gold. And the Bank of Korea is planning to buy gold from domestic producers for the first time in 13 years. What does this suggest about the changing role of gold in the country's financial strategy?
Well, I just look at how much the Bank of Korea is holding gold, and that's a little bit more than 1%, about $5 billion. And that is about a little more than 1%. And I think the Bank of Korea is going to diversify their reserve assets because the hold in the gold is too little. 1% is very little. So I think the Bank of Korea decided to increase the portion of the gold, and that is one thing. And that is, one of the prime reasons for that is, I think, is inflation hedge, because inflation is inevitable globally, and the stock price is risky. So the safe bet, I think, is to hold more in gold. So I think that the Bank of Korea is going to increase the gold holding. But you should not be mistaken. The government exempted the sales tax on the gold, but that is not applied to the general public. It is only exempted for the exchange, of the Bank of Korea purchases. So the sales tax exemption is only to the Bank of Korea and has nothing to do with the public, possession or purchase of gold. So I think there's a little change in the market price of gold, but definitely Bank of Korea will increase the holding of gold in 2026 and 2027 significantly.
Right. All right, Professor Shin, thank you so much for your time and insight as always. We appreciate it.
My pleasure.